SoFi is a bad stock. Ooh, sensational title, right? Why are you saying this? Aren't you not a SoFi shareholder? Have you not been talking about SoFi since before it was SoFi, since it was IPOE? So why are you saying SoFi is a bad stock right now? Are you spreading FUD? Are you a bag holder? Do you want to sell your shares? All of those questions are probably being typed right now as we speak in the comment section below. So let me explain. As you know, a stock does not always reflect what the business is doing. And the business doesn't always reflect what the stock is doing. Sometimes a stock goes up, but the business hasn't really done well. On the other side, sometimes you have a business doing well, but the stock doesn't reflect that in the short run. Of course, in the meme saga, meme era, you had bad companies where the stock go up quite a lot. Short squeeze, which by the way, with SoFi, 17% short float, could happen. You never know. Roaring kitties, if you again have 500,000 people watching your live stream. Just saying, if you want to pick a better company, maybe this one could be a good candidate. No, but for real, let's talk about SoFi right now. I want to touch on a couple of points that were mentioned by some others in the SoFi community. Not being critical here, just wanted to put my point of view in this video. Now, currently SoFi is still down close to 30% year to date. In the last 3 months, it's down 6.4%. We're again hovering close to that $7 marks. Now, the good thing is that $7 seems to be quite, or the area of $7 seems to be quite a support line. Now, right now, for everybody that's saying, oh, forward PE 67.7 times, extremely high. For a company like SoFi, watching or looking for a good PE right now does not make any sense. It just turned GAAP profitable. Give it time. Second of all, if you want to look at the other metrics, price to sales at 3 times next 12 months, lower than the 5-year mean, or in this case 3-year mean of 5.2 times. If you look at price to tangible book value, 1.8 compared to 2.5, the 3-year mean. It was a bit lower before, back in May of 2023, so just over a year ago, it was at 1.4, 1.5-ish, but still 1.8, not that expensive in my opinion for a company that is growing as fast. Some will say not that fast, but fast enough like SoFi. If you want to have a major overview of what the business has been doing in the last couple of years, this is total revenue in the last 12 months. It has grown close to 400% since, 2020, mid-2020 or so? Again, revenues last 12 months. But still, close to 400% growth since then. Then, gross profit, over 500% growth since then. Net income, now we're getting closer. Of course, a year from now, you're going to see a green candle, since now we are becoming profitable, but it has been improving. Currently, the average analyst price target sits 27.4% higher than the price we're at today at $8.9. The price targets have actually been flat since the beginning of May. Now, if we look at what the analysts are expecting from the business in the next coming fiscal years, sales growth of around 15-16% fiscal year 24-25, but then a reacceleration of closer to 19.5% in fiscal year 2026. But it's clear that all the analysts are expecting this business to become way more profitable. 7 cents EPS fiscal year 2024, but then close to 200% year-over-year growth in fiscal year 2025, and then another 96% year-over-year growth in fiscal year 2026. The company as well has told us what they expect might happen in the coming years. More on that in just a second. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we'd really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I first want to start off with the obvious here, macro uncertainty. So what they mentioned in the last earnings call, I would say our outlook for the lending business is more reflective of uncertainty as opposed to whether or not there are great trends. Taking a conservative stance gives us the most optionality to do more, but not necessarily to have to do less. And especially right now when you get, again, fears that banks might blow up, I think SoFi has done the right thing. Also, if you forgot, revenue guide was raised, assumes negative 6.5 year-over-year growth in lending and 20% year-over-year growth in tech. They expect to add over 2.3 million new members in 2024. Yes, Q2 guide was light, SoFi's total capital ratio improved from 15.3% to 17.3% quarter over quarter. Annualized revenue per product of $59, that's up 31% year over year versus 45% in Q1 2023. Now, with regards to innovation, there has been some folks talking about the, let's say, reduced pace of innovation or release of some products with regards to SoFi. And while that might be true, remember, you don't always have to launch thousands and thousands of new features and products each and every time. Yes, back in 2020, 2021, they did all the groundwork. So of course they were releasing plenty of new products, which makes sense. But then again, at the end of the day, what do you want them to release so much each and every week, each and every month? It just doesn't make any much sense, right? This is not a game. This is a financial product, a financial platform. What else do you want them to release? A better UI UX? Yes, I can agree, especially if you want to compete with the likes of Robinhood. Maybe just make a copycat, right? Okay, that's one thing. But all the rest, if you add all of your new members, right? Because right now we're at what? 8.1 million members. That's up 44% year over year, which, by the way, I'll touch a little bit on the fact that they have 8.1 million members. At the end of the day, the members come in, they just want either to manage their money better than other places, get rewarded because their money is in SoFi, spend money easier, invest, trade, all of those things, right? Take out loans, of course. Make that experience the best in class. You don't have to add fancy, schmancy new products each and every week to appease retail investors. Oh, there is a new product that has been released. Oh, there's a new feature that has been released. It doesn't make much sense. At the end of the day, you want the customer to be happy, to have the best performance, to have the best experience, shall I say, based on what the app is providing right now. And let's be honest, when you have such financial apps, there are just a handful of things that you want it to be doing very, very well. All the rest is just nice to have. That's just my opinion. Of course, then we can talk about Galileo and the tech platform and maybe the lack of product announcement with regards to that. But I think that with regards to that side of the business, there's a lot of things that have been working at the back end that we don't see right now, or customers see, but we don't because we're not that big customer. Of course, you could have announcements just for the sake of information. Fine. Now, going back to all the members, the fact that they have 8.1 million members means that, let's say, now that they're investing more and more in credit cards, they can push credit cards to the 8.1 million members. Since they have SoFi Bank, they can know their customers much better than other competitors as well. And that's, in my opinion, more important than just making announcements for the sake of announcements. Now, one extra thing here, well, a couple of extra things here, with regards to future guidance, right? They said for the 2023 through 2026 time period, we see 20 to 25% compound annual revenue growth, which means sometimes might be more, sometimes might be less. The earnings power associated with this growth is notable and could drive between 55 cents and 80 cents per share in GAAP EPS in 2026, which of course, huge increase compared to where we're at today. Moreover, they see 20 to 25% EPS growth beyond 2026. Until any of these projections change on the downside, I don't see any reason why I should be selling my shares. Because this to me is extremely positive. If they revise down, okay, maybe you can ask some questions, but so far, so good. Then going back to the credit card business. So they brought significant subject matter expertise in the credit card business that have actually built near prime cards in the past. Our product remains prime product, it will continue to be a prime product, but we felt like coming out of 2023, we had the learnings that allows us to be more aggressive in 2024 in that business as things unfold. So expect us to invest more in the business and see some good innovation in the back half of the year. So everybody that's complaining, back half of the year, expect to see some good innovation based on the learnings that we've had from the last 3 years. It's a great product. It has a high ROE product, but there is a J-curve that you have to go through. J-curve, as you can see here, bottom right screen. So you're going to have some weakness at first, but then you'll see the huge benefits in the future. And so yes, right now SoFi might be a bad stock, right? Because it hasn't been doing anything. To be honest, it hasn't been doing anything for quite a while. Yes, we have visited the $10 mark twice or so in the last year and a half. But other than that, we've always been around those $7 marks, right? It's maybe painful to see because, you see Nvidia, you see all the other companies going up and up and up. Why isn't SoFi going up? Again, you chose SoFi for a specific reason. If you chose SoFi because you wanted it to go at $30 tomorrow and then sell all your shares, you should have never bought the stock. Yes, the stock sucks for now, but to me, as long as the business continues to prove that it is going up and to the right, it is becoming more and more profitable, I don't see any reasons why I should be selling, especially not at $7. Plus, think of it, long-term perspective. I'm not talking about the traders or those that play options. That's a different ballgame. But for long-term investors, do you think that 5-10 years from now, we're still going to be in this high interest rate environment? Probably not, right? Of course, interest rates coming down is definitely helping a business like SoFi. When will the rate cuts happen? I don't know. How many rate cuts will happen? I don't know either. I think it's going to happen in the back half of the year. That's just my prediction, but I don't know for sure. Plus, their own outlook was definitely very, very pessimistic. So there is, let's say, a margin of safety there. That's it. Bad stock, still a pretty good business. You don't have to like the stock. Not everybody has to buy the stock, which is always something I keep repeating for those that are saying, SoFi is bad, or Tesla is bad, or Palantir is bad, or this and that is bad. It's fine. You don't like it? Don't buy it. Plenty of other companies in the public market where you can put your money in. Just have the right conviction and the right time horizon. That's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.